Hello, everybody. Welcome back to some remarks on trade tax. These are now meant to be nearly the final ones because now we are going to speak about the trade tax base assessment. So the final trade tax base and the allocation of that taxable amount to the different cities where the enterprise runs its business. So our question today is, so how do we arrive from the trade profit to the final trade tax amount, which in the end is payable to the cities? The procedure has up to 3 steps. The first one is you calculate a figure which serves as a final trade tax base that is laid down in 11.1 and 11.2 of the Trade Tax Act. Then you have the allocation of the different parts which of that tax base which go to the different cities involved in the trade tax case. That is laid down in paragraphs 29 to 31 of the Trade Tax Act because it happens at the end and it's rather a peculiarity, not happening in every individual case. And naturally, when each city has been informed which part of the trade tax base they can levy a tax on, then each city levies its or applies its own trade tax rate, its city multiplier, to the share which they have got. If you want to have a look at how it looks in the legal sources, here we have first 11.1 of the German Trade Tax Act, and we should have a first glance on that. So here we find out that the first step we have to do is to calculate a so-called trade tax base or Steuermessbetrag. This is to be generated from or starting with the trade profit by the following steps. First, you have to round it down to a round figure, which can be divided correctly or even by full 100 euro. And then you deduct a free allowance of 24,500 in several cases, in other cases not. And the result from all this will be multiplied by 3.5%. That is then the trade tax base, the final one, which will be allocated to the different cities. Now 16.1 of the Trade Tax Act tells you what happens then. 16.1 says the most important thing, that the trade tax is the product of trade tax base with a multiplier which is fixed by the city or municipality. A rather strange rule is then to be found in 16.4, which says that there is a minimum obligatory tax rate which cities have to levy. That is 16.4. It says we have a minimum tax rate of 200%, and that automatically applies in all cases where a city council or whatever gremium is responsible sets a lower percentage. So even if a council refused to decide on 200% or 300% or so, automatically 200% would then be applied. Okay, so the first step, to sum it up, works as follows. You round down the trade profit to a number which is which is an even amount divisible by 100 euro. You deduct a free allowance in case of a natural person. You deduct a free allowance in case of a partnership, and there's clearly said in case of a partnership you deduct that free allowance. So even if all the partners are juridical persons, nevertheless it would be a partnership, and so that free allowance applies. Or you have no free allowance at all in case of an AG or K or GmbH or SE or another legal form which is classified as a so-called capital company. Whereas in cases where you have a juridical person established for a clearly non-economic purpose, like a registered private association, an EV, a sports club, a chess club, or the Friends of the University of Tax Sciences at Kleve or so. In such a case, you have 5,000 euro free allowance. Good. By the way, this last free allowance is for these non-economic institutions. If they just by chance happen to earn some 100 or 200 euro from business, so then they probably don't know about their tax liability, and so such a free allowance of up to 5,000 euro remain tax-free. That is a vital measure which keeps all the directors of such EVs who do not know about tax law and do not do much out of prison. Because if there is no tax due, then if you don't hand in a tax declaration, you cannot commit tax fraud or a tax crime if the tax is zero. That's a very comforting idea, and that is why such free allowance for these small and unimportant cases has been created. Well, after the free allowance deduction, either if or if not, then you multiply the resulting amount. That is then the trade tax base already. No, then you take that times 3.5%, and that is then the trade tax base. Yeah. So that is called trade tax base. In German, the word is Steuermessbetrag, which is a rather curious word, relatively rare, so forget about it. I only include the translation. You know that. Why? Because other people talking about German law might choose a different English translation. And so when you, in the later course of your career, communicate with somebody who learned somewhere else, then that other person might be used to another translation. And so big guessworking would probably start. Do you mean by trade tax base the same as I mean with trade tax factor or so? And then they would try to guess around, and so it's always good if you can on demand offer to your conversation partner the original term in the original language. So you could then say, well, by trade tax base I mean what is called in German Steuermessbetrag, I think it's called. And then the other person could say, oh, yeah, have a look. Okay, my translation, in my original text we have the same word, so we are evidently speaking about the same thing. Then you have great happiness and can be satisfied and don't need to worry. So allow me a remark on that free allowance of 24,500. First, that's a very uneven amount. It goes back to 48,000 Deutsche Mark 20 years ago or so. And it was meant as a kind of equivalent to that salary of a natural person who works as a manager in his or her own enterprise. Because if the owner works for the own enterprise, you can have no salary or wage payment. So the profit of sole tradership would always be higher than that of a competitor. And so a sole trader would always pay more trade tax in comparison to a GmbH. To give a compensation for that, originally we introduced that free allowance. That was 4,000 Deutsche Mark per month. That was at the time when it was set or fixed in the law. That was a kind of equivalent or adequate salary for management, for an owner of an enterprise. Now, for a GmbH, that for a GmbH or an AG, that free allowance is not granted, because if you have a GmbH and you are a shareholder working for the GmbH, then you can get a wage which is respected by tax law. So they don't have the problem that the work of the owner is not paid for. So therefore you don't get free allowance if you are a GmbH or an AG, because then you can deduct the real actual wage payments. And so your profit is already lower than that of your natural person competitor. You should naturally wake up a bit and say, oh my God, 24,500 as adequate equivalent for the salary of the director of, okay, let's admit perhaps a small enterprise. Can that be adequate? That is 2,000 gross per month and some 500 or so on top. Who, ladies and gentlemen, who owns a small enterprise is paid 2,000 gross? So that's simply something which comes directly from probably a novel or from ideas like World of Wonders or Miracles of the World. It's simply not understandable. The only thing which you can, or how you can understand it, is probably that amount was fixed somewhere in the 1970s or 1960s, when that really was a good salary, 4,000 Deutsche Mark per month. And never later it was ever adjusted to inflation. So it's probably decades old and absolutely inadequate. Now, nobody ever tries to change it. Nobody ever complains strongly about it. We are going to talk about that perhaps in a later video, why that is the case. For many people, the trade tax is no longer such a financial burden as it was some 30 years ago. And those who really want to deduct an adequate salary for their work as manager usually get the advice from the tax advisor, why don't you set up a GmbH? Then you can set off an adequate salary for yourself, and then the problem is gone. That is the reason why nearly nobody ever complains, and why the case, if that can still be justified, never goes to court. Nobody is going to quarrel about a problem which you can easily avoid in a court case for 10 or 15 years, up to the highest courts, in that case probably up to the Constitutional Court, in order to get a yes for the allegation this 24,500 is far off what it is meant to represent, and so it's illogical, unfair, and it violates equality of tax law, of taxation. But where there is no complaint, there will be no judge. That's a very old principle, and so this rule goes on unchallenged in courts, and Parliament doesn't bother about it, well, as long as nobody complains. So here you have, it's a kind of an antique rule who nobody complains about. Okay, so curiosities, but why should we have some curiosities? Yeah, now we have some basic knowledge again, and so let's think about an example case. We have a sole trader, and I thought it would be adequate to give the man a name which signalizes that. So he is Solely Man. Solely Man owns a shop in Cologne, and the city multiplier of Cologne shall be this year, 2021, that's really the case, it shall be 475%. By the way, I add that this is the case this year, or shall be the case in I don't know when you look this video, probably in the year of 3000, and so perhaps Cologne has at this time changed its multiplier. And just to make sure, you cannot be sure that when you watch this video it's still unchanged. This is the value for 2021. Okay, but you know, if you want to check this, open the internet, type in Gewerbesteuerhebesatz for the year when you actually watch this video and check. And then, okay. The income from business resulting from the shop in Cologne was 440,753. I don't know why I chose that number, there is no reason. But during the computation of that figure, the following facts were treated correctly. We paid interest to a bank, we paid rent for machines, we received dividends from a subsidiary, that was a 20% participation, and we had a rent paid for a building, 200,000 euro. Furthermore, we had a loss from a partnership where we have a share in, and we had to take that over, so 50,000 euro vanished to that partnership. And donations have been made because donations are such a nice topic, so we made them just to make the case interesting. And now the task is easy, solve the case. And as this case does not involve several cities, there will be no apportionment necessary to several cities, so everything which comes out as trade tax base will directly be used by the city of Cologne as a base for their tax claim. And so we can fully solve that case just by applying our knowledge which we already have. So now what should you do? You should now press not the stop button, but you should freeze your screen, make a pause in the video, have a look on the data, take a sheet of paper and try to make a good solution. And afterwards, restart the video again at this point and then see what the solution could and should comprise. Okay, so small break, white sheet of paper, or at least clean sheet of paper, a pencil, the Trade Tax Acts, a brain, and then a solution. Okay, till in a few minutes. Come back, don't forget to come back. Okay, so naturally, what shall we do? We begin at the beginning, so with tax liability. And the business here is liable to trade tax under paragraph 2.1 of the Trade Tax Act because it is a sole trade. So the tax base, well, it's the trade profit adjusted by modifications demanded by paragraphs 8 and 9 of the Trade Tax Act. Here, the starting value for our computation is therefore 447.53. Now, 2.1, interest to a bank. That is an add back under paragraph 8, number 1, letter A of the Trade Tax Act, and it's fully added back plus 250,000. 2.2, the rent paid for machines. It's an add back under paragraph 8, number 1, letter D of the Trade Tax Act, and that is 1/5 of the rent, so 40,000. Because we have no. 1/5 of the rent paid for machines, 150,000 divided by 3 and by 5, 30,000. So that's our figure which counts. By the way, here you see that even when you think you are fit in the case, you always have to be cautious that you might make mistakes just out of carelessness when you begin to feel safe. And that is where you always have to check your sentences or your phrases which you write down or your results, if you really can be sure that it's correct and that you did not make any stupid mistake or overlooked something or the like. The dividends received. Well, you remember dividends were fully taxable or fully tax-free. And it depends on whether you have 15% or more, then they are fully tax-free, because then it's regarded as the profit of another firm of you. Or if it's less than 15%, then it's regarded as a revenue from a kind of a capital investment. So what shall we do? Dividends received from subsidiary should be fully tax-free. Paragraph 9, number 2a of the Trade Tax Act. And so they should in the end be included with an amount of 0. Up to now, included in the income from business were only 60% of that dividend. Still, because of paragraph 3, number 40 ESTG, so 60,000 have still to be eliminated by minus 60,000 adjustment. 2.4, the rent paid for the building. Half of that rent is an add back under paragraph 8, number 1, letter E, Gewerbesteuergesetz. 2.5, the loss from the other partnership is not a part of the trade profit of this enterprise here. So elimination under paragraph 8, number 8, Trade Tax Act. So we have to add back that loss. It has nothing to do with what the firm in Cologne produced, and donations, 20% of the income, not the trade profit, from business shall be deductible. That's the limit, not the amount. And the income from business was here 440,753. No add back of the donations expense before. Usually that was the first step, you remember that, because in a sole tradership, donations are not business expense, only in case of a GmbH. So the donations expense has never been deducted. So what we have to compute now is how much is that now. And so what we should do now is take refuge to a calculator, or if you are very good at calculating on your own, just using your brains, do it just now. Now here we end up with 88,150.60. Paid were only 20,000. So fully deductible is 20,000. Okay. Now, number 3, adding everything up. Okay, this is not a very impressive headline, you know that, but okay, 3. So first step is calculate the add backs under paragraph 8, number 1 of the Trade Tax Act, because you have to view them together. Because of event number 1, 250,000. Because of event number 2, 30,000. Because of event number 3, forget about this, because this has nothing to do with 8, number 1. adjustments, it is other adjustments. The rent payment is added back. Well, and here I see, naturally, I forgot to write down the figure. So that was plus 100,000. So here we have 100,000. Number 5 is not related to 8 number 1. Number 6 is not related to 8 number 1. So we can now draw a subtotal. So that will be 380,000. What comes next, ladies and gentlemen? Well, 380,000. That's the first step only. 380,000 minus, there was a free allowance for the 8 number 1 deduction, add-backs, minus 200,000. So we end up with a subtotal again of 180,000. And this is only taken with a quarter. And you remember that? Never calculate that quarter in advance. So never calculate 1/4 of the interest, 1/4 of the rent, and so on, because then it goes fundamentally wrong. You know, quartering always happens at the end of the thing. So if my brain is not completely rotten, then that will be 45,000. Good. Now, adding up finally, we have income from business 457.53 plus paragraph 8 number 1 add-backs 45,000. Then we have because of number 3 minus 60,000. We have because of number 5 plus 50,000. And we have because of number 6 deductible donations of 20,000. So we end up with some total, and there taking refuge to a calculator is again a good idea. So let's do this. And I believe that leads to 455,753. Let's check the plausibility. Minus 60 plus 50 is minus 10,000. So we would arrive at 430,000. Then we have plus 45 minus that. So 25. Yeah, seems to be correct. So then we come to rounding down as required by 11.1, and we round down to even 100, not even 1,000, so to this value. Now, do we have a free allowance to be deducted? And the answer is yes, because sole trader is natural person. 11.1 number 1 means minus 24,500. So we have a new subtotal. This is now 431,200. And what do we have to do now? The same thing taken times 3.5%. 11.2 trade tax. So again, let's take refuge to the calculator. And if I'm not mistaken, that's 15,092 euro. And now we can computation of the final tax amount, that is trade tax base times city multiplier of loan. See paragraph 16.1. Yeah. So here we have that times 475%, and again let's take a calculator and try to type it in. So there is a result. 75,687. I can't guarantee that it's not rounded to a full euro or such a thing like that, but I think that does not really matter greatly. So that seems to be our result. Case solved. Congratulations if you had most of that case solution in the same way as I had, or perhaps even better. I hope I made no evident calculation mistakes, and yeah, that's it. So let's go back to our other stuff and go on and have a look on the rest of the case solution. Okay, and as you might expect from your experience in former cases, here we have example case 2. The AB OHG has its seat and place of management in Düsseldorf, where there is also the only permanent establishment of the OHG. The income from business is 753,242. During the computation of this figure, the following events were taken into account: interest payments to a bank, lease payments for a partner for a building, dividends received from a 10% participation in a GmbH from Munich, Germany, royalties paid to a company in the Netherlands, and that was it. Solve the case. As in the as there is no other thing necessary, everything can be done with this data already. The only additional information which we need to have is the city multiplier of Düsseldorf, and I can tell you the city multiplier of Düsseldorf is at the moment, that is in 2021, 440%. So 440%. Again, what we should do at the beginning is to begin at the beginning, so with the tax liability. And the OHG is liable to trade tax because it is a partnership under the rules of 2.1 Trade Tax Act, because it runs business in the sense of the ESTG C1523 number 1 of the ESTG, if you want to add that reason. Otherwise it would already be probably sufficient. So computation of the trade profit is defined as income from a business plus or minus adjustments under paragraphs 8 and 9 Trade Tax Act. Here, well, we have 2.1 interest to bank, that is an add back in full under paragraph 8 number 1 letter A Trade Tax Act. Please look it up. So we have plus 100. 2.2, the lease payments to a partner. They are no expense from perspective of income tax law, so not relevant. Now we have here a second aspect. The lease payments from the partner to the outside owner of that building. These payments are under the rules for partnerships in German ESTG business expenses of the partnership. You remember that business expense is what is caused by the business and is owed by or borne by all of the partners together. That was not the case, or one of them alone, and that is the case here. So we have rent payments with effect for taxation of 70,000 to the outside world, and so that is an add back for rent payments for a building under paragraph 8 number 1 letter E. 50% add back, that's 35,000. 2.3 dividends received. Now the question is again, dividends, you remember that they are either fully taxable under trade tax or fully exempted. These here should be fully taxable because the participation is lower than 15%. Until now, the dividend was included in the income from business with an amount of 60%, that is 60,000 only, because of the rule of 3 number 40, the 60-40 rule, that 60% of dividend only are taxable, 40 are tax-free under income tax. You remember that. And so the remaining amount of 40,000 has to be added back, because only then we have the full 100,000 made taxable. We must look for that in paragraph 8, and we can find it in 8 number 5 of the Trade Tax Act. I hope you found this during your preparation, when you took your empty, clean sheet of paper and prepared a solution for yourself in advance. The royalties. I always appreciate the word royalty. You think then of Prince Charles, the whole Windsor family, and you see here royalty is added back. Well, that sounds like a restoration of monarchy. Well, so let's stop doing nonsense and start to honestly and seriously deal with that payment. Well, 1/4 is added back. That is 50,000, and that can be seen in set number 1, letter F of the Trade Tax Act. That was everything, and so we can start with adding up. 3.1. The add backs under paragraph 8 number 1 have to be calculated in advance and before and separately, because you are not allowed to mix them up with the rest. So we have, what do we have here? Because of number 1, 100,000. Because of number 2, 35,000. You know, only the rent payment to the outside accounted. Because of number 3, nothing. Because of number 4, 50,000. Okay? So we have a total of 185,000. From that, ladies and gentlemen, from that 185,000, so subtotal 185,000, we can deduct a free allowance of 200,000. So we arrive at a new subtotal of 0. Okay, surprising, but nice. So finding the final trade profit figures. So adding up the rest now. We have income from business 753,254. We have add backs, paragraph 8 number 1, 0. We have add backs under number 3, that was the dividends, plus 40,000. And there was then nothing else. So we have a total of 79242 euro. Next step is rounding down paragraph 11.1 to even 100 euro values, so 79200 euro. Then do we get a free allowance under paragraph 11.1 number 1? And the answer is yes, it is a partnership. So we have minus 24,500. So let us have a small look to our calculators. Use that. 79,300. There will be a result, and that result seems to be this one. So then apply the factor of 3.5% to it. 11 to Trade Tax Act, and that leads to 768,700 times 3.5%. You see, I always write that down because if I make a calculation mistake or a typing mistake or so, in principle, that would be greatly helpful in an exam or when somebody checks your documents or what else, that they can distinguish if you made a careless mistake or overlooked something, or if you did something on purpose. So for something on purpose, you would naturally go to prison. Good. This is our final trade tax base. Now, computation of the tax multiplier, 440% applied to trade tax base C16.1. It's important to cite that to prove that we know it. So we have 26,904.50 times 440%. And if we take refuge to calculators again, this is an impressive amount of 118,379.80. And I'm pretty sure, by the way, that this is not absolutely correct from the perspective of the formalities, because there will be some German rules which allow or even force the fiscal authorities to round down to some even euro amounts, but let's not care about this. Naturally, nobody would ever complain about the 80 cents if they are necessary or not, or if the outcome is, let's say, €5 lower or higher than what we computed here due to different rounding rules. So that is really something where nobody should care about. Okay, so we have again solved a case, and so we deserve a small break, but surprise, you will have none. We directly go on with new stuff. Now let's go to the last step, which we have left out because that's a bit more complicated. What happens if an enterprise does business in more than one city? Then naturally the trade profit or the resulting trade tax base has to be apportioned, distributed between all these cities involved. And the first thing you should notice is that, similar to the constellation in international context, only such cities get a part of the prey, so a part of the tax base, where the enterprise has a permanent establishment. I hope that you remember, I really and sincerely hope that you still know that a permanent establishment is a fixed place of business or a technical device by which an enterprise runs a business. So where you have that, you will pay a part of your trade tax. In practice, that naturally implies that if you only have some customers in the city, but no rooms, no factory halls, nothing like this, then you don't pay taxes there. So if you just deliver goods per mail or per truck to a customer in the city, that doesn't bring along trade tax there. Comparable to the situation in Article 7 OECD Model Convention between two states. Now the parallelism ends here. In contrast to what happens in an international context, the trade tax base is not calculated for each city according to such a kind of arm's length principle, as if they had done services and deliveries for each other for market prices. That is regarded as far too administratively burdensome and absolutely intolerable for an average citizen and for a small enterprise or so. So a normal enterprise, for that, transfer pricing is regarded by the legislating bodies as absolutely unbearable. And well, you know probably already about transfer pricing. You can have a certain respect for that opinion. You should, by the way, wake up a bit and notice that during the last decades, it has become usual that enterprises usually play in the worldwide market or in the global market, or at least in the European Union's market. There, still we have the application of transfer pricing rules as an obligation. So what we, since decades already, have always regarded as intolerable and too complicated for an enterprise to split up the total profit of an enterprise obtained in a single market according to fictions, as if all parts of the enterprise had been independent and charged each other market prices. We have already seen that this is intolerable, unbearable, too costly, and too arbitrary. So we renounced on that, but nobody is going to draw the conclusion that now that European Union is or has become for 35 years perhaps already, or more, 30 years, okay, since 1992 at the end, that this union has now become a single market, more and more integrated, where you have even small and medium players playing around in the economy of different parts of this common market, that there we still demand the correct application of transfer pricing rules. By the way, where most people are not able to follow them correctly, and most tax inspectors are not able to check them correctly, so that it's probably an outcome which is strongly influenced by mere chance. Nobody draws the conclusion we should do it like in the area of trade tax. Well, trade tax is, so although it comes from the Middle Ages, more progressive than our present international taxation regime. Here we have in trade tax a formula apportionment. So the trade tax is distributed among the cities interested according to a formula, according to a key figure. And that key is nothing else than the wages, or better, the percentage of the wages paid in that permanent establishment in relation to all wages paid by the whole enterprise. Naturally, you want perhaps understand how it works, and secondly, perhaps why it is done in the way how it is done. So let's have a look. Enterprise A shall have a trade tax base of 300,000, and it shall be represented by permanent establishments in Düsseldorf, Cologne, and Munich. In Düsseldorf, the wages paid during the year were 400,000, in Cologne 500,000, in Munich 100,000. So what can we conclude from that? 40% of the wages were paid in Düsseldorf, 50% of all wages were paid in Cologne, and 10% of all wages were paid in Munich. Conclusion, what does it mean for the apportionment of the trade tax base? Well, 40% of the base go to Düsseldorf, 50% go to Cologne, and 10% go to Munich. Simple. Good. The underlying idea, why the wages? Why the wages, ladies and gentlemen? Well, at first glance, you probably don't understand that, and I think, okay, instead of the wages, they could also have taken the number of dogs running through the street or so, but why is the wages adequate? The first idea is probably the following one. Well, the first idea would be perhaps we have 3 permanent establishments, everyone gets 1/3. That's clearly rubbish if the one PE is very small and the other is very large. So the next approach is probably comparing the number of people working there. Imagine 20 employees work in a PE in Frankfurt and 10 only work in Hamburg. Then the first naive idea might be there's 2/3 of all the work done in Frankfurt and 1/3 of all the work is done in Hamburg. So 2/3 of the overall profit have their cause in Frankfurt and 1/3 is produced in Hamburg. Sounds promising, sounds logical, is a reasonable assumption. But on the other hand, now look to the details. Why is this assumption still naive? Well, imagine the 10 employees in Hamburg are highly qualified engineers. Half of them are candidates for a Nobel Prize, and the other half has already got them. And the 20 employees working in Frankfurt are unskilled working students, beginners in the first or second semester, and their jobs in Frankfurt is doing typing work for letters, packaging of mail and goods which are sent to customers, and other activities of completely minor importance. So is now our assumption 20 people work in Frankfurt, 10 work in Hamburg, so the distribution of the profit is caused with 2/3 in Frankfurt and 1/3 in Hamburg. Can that assumption still be upheld? And the answer is clearly not. The people working in Hamburg are far more valuable for the enterprise. They create far more profit or parts of the profit than the people closing the envelopes and printing out some letters. So how can we make the people comparable? How can we weight that work according to its importance? Well, and here is now a reasonable assumption that if someone gets, let's say, 10 times the salary of somebody else, then this person's work is also worth 10 times more than the work of somebody else, so that it's 10 times more productive. That assumption is not unreasonable, especially if the people have the possibility to negotiate about their salaries. And so the at least the perspective of the firm itself seems to confirm that you would not pay 10 times the salary of an average worker to somebody if that special worker is not worth 10 times what the other one does for the business. So the wages can be a clever approach to distribute, to find out which part of the overall profit can be regarded as cost in the individual PE. It's a very rough estimate, but it's a reasonable estimate. So that is why we take that into account. That makes it clear why not the number of people, but the wages play the decisive role as a key factor for the apportionment. Now, you can naturally also follow up that principle in the Legal Sources 29 Trade Tax Act in order to avoid a catastrophe when it comes to adding up and calculating. The wages which are paid in the different permanent establishments have to be rounded down to full €1,000 amounts. Otherwise, you end up with percentages with many decimals behind the comma. So that's not so frequent. There are some exceptional cases, modifications. First, only a curiosity, windparks. Imagine you can have a huge area where you have these wind parks run by an enterprise where they produce electric current. Now that's definitively a permanent establishment. These things stand around there for 20 years or so. They are clearly a technical device. You can't overlook them. They are not immaterial, so not unimportant. And it's clear that the enterprise runs its business by them, so they are a permanent establishment. But now when you say how many people work in that wind park, you will probably find out that there is nobody working in that wind park, because usually it just stands there. The things are working and the current is produced, and let's say once in a week, once in a month, or once in half a year, somebody comes and inspects if everything is okay. So no wages paid there. That would mean that the city where such a huge area is covered by a wind park does get no taxes at all from the whole activities of that firm. And in order to take that specific situation into account, there is a special rule for such cases. Hear it and forget it. You will probably never end up as a tax advisor of a wind park. So nice to hear and even nicer to forget. A bit more important is the idea of a sole tradership or partnership. There you have a problem. Very often the owner also works in his or her own firm. But the owner can, for himself or herself, not pay any wages under civil law. You can't make contracts with yourself. And even if there is a partnership, so that one of the owners could have a contract with a partnership under civil law, the payment would not be accepted as a wage payment from the perspective of tax law. So if you ask for the wages paid in that permanent establishment where the owner works, the outcome will be no. Imagine an extreme example, then you see that this can't be correct. Imagine you have a small enterprise, you are a sole trader, and you have a very small kiosk or cabin where you sell newspapers at the train station. Let's say 10 square meters where you stand all over the day. Now you opened up a second a small establishment in the railway station of the next city. And naturally, as you yourself cannot be present at two locations, you need your first and only employee now. So imagine you stand again, as ever, in your small, indeed small enterprise in Aachen, and your employee now stands in the second establishment, 10 square meter again, in Würseln, which is a kind of a neighboring city to Aachen. Well, if you now say you have a trade tax base of, let's say, 20,000 or 10,000 euro, which has now to be apportioned to the two cities, then you would have to say, well, the wages paid in Aachen, 0. The wages paid in Würseln, where your only employee works, 100%. And so all of the profit goes to one city, although evidently half-half would be more adequate because you had two people working. So there is a rule which says if the owner works in the owner's own firm, then for the work of the owner you can take into account only for the formula for the apportionment of the money that the owner's work has a value of 25,000 euro. If you have more than one owner, the total of the work of all owners is valued with 25,000 again. This is again totally unrealistic. It's the same problem as with the free allowance for natural persons. Evidently completely outdated. Decades ago that figure had been fixed and it has never been adjusted to inflation. You see that rule in 31.5 of the Trade Tax Act. This is rather a peculiarity. Good. Well, let's think again about an example case. So A GmbH has an income from business of 600,098 euro. During the computation, the following things were correctly taken into account. Interest was paid to a bank, dividends were received from a percentage, or no, rent was paid, dividends was received, royalties were paid, and that's it. And A GmbH has a PE in Cologne, one in Düsseldorf, and one in Frankfurt. The multipliers are given, and the wages paid in Cologne are 200,000, Düsseldorf 250, and Frankfurt, let's say 550. And here I should adjust something. Or let's say the wages paid in Cologne are 250, because otherwise, ladies and gentlemen, we have a weight problem. So as you see, I just corrected that. Now we have 250 because that's better for the calculation of the adequate percentages. Okay, so let's now think a bit about the potential solution of that case. My recommendation would be, again, pause the video, so have a break here. Take an empty sheet of paper, a pencil, a brain, and a printout of the tax acts or a PDF file of the tax acts, and try to find a good solution for that situation here. Okay, and then restart the video if you have made your own sketch of the solution, as comprehensive as you can. So every statement necessary, which is necessary, comment every logical step which is necessary to arrive at a solution. Then give reasons and references to the Tax Act for every step, and so leave nothing out. And then restart the video again and have a look on how I would solve this case. So again, let's start tax liability. A GmbH is liable to trade tax, and this was 2.2 ESTG, no ESTG, Trade Tax Act, because it's a juridical person, a capital company. The trade profit calculation. Well, trade profit derived from income from business, adjusted by paragraphs 8 and 9, the modifications laid down there. See paragraph 7, Trade Tax Act. I forgot that in my last solutions. I hope you had it. The trade tax base is to be calculated. Trade tax, trade profit. That is set by paragraph 6, Trade Tax Act, and then 7 says how you calculate it. So here you can get some additional points or minor points. And now we start. The interest to the bank, that's an add back under paragraph 8, number 1 letter. Look it up, please. A, Trade Tax Act. It's fully added back, 600,000. 2.2, the rent for machines, added back with 20%, that's 100, no, that's 40,000 euro. See paragraph 8, number 1, letter D of the Trade Tax Act. 2.3, the dividends received. The first step, what we talk about or think about, is fully taxable or fully tax-free. Should be fully taxable, because the participation is lower than 15%. And so 100% must be taxable. In the income from business, this dividend, so in the corporation tax result, was included with 0. See paragraph 8b1 plus paragraph 8b4 KSDG, because participation was more than 10%. So we have to fully add back the dividend amount, 100,000. On the other hand, now the 5% lump sum of paragraph 8b5 KSDG is no longer justified and can be revoked for trade tax, so by minus 5,000. So we end up with a correction of plus 95,000 in total for that text figure. 2.4, the royalties. Add back with 1/4. So that is 75,000 euro. See paragraph 8, number 1, letter A, letter F, Trade Tax Act. And by the way, we should still give a rule why we add back this. 8, number 5, Trade Tax Act says you have to add up everything again, every dividend again, to full 100%, as far as you are not allowed to treat the dividend as fully tax exempt. So we end up with a trade profit calculation, and we have the first of 3.1, the add backs under paragraph 8, number 1, Trade Tax Act. Now, because of entry number 1 plus 600,000, because of entry number 2 we have plus 40,000, because of number 3 we have nothing, because that was the dividend, and we have, that was another position, and we have 75,000. So the new subtotal is 715,000 minus free allowance under paragraph 8, number 1, Trade Tax Act of minus 200,000, and leads to a new subtotal of 515,000 euro. 1/4 of that is added back, and so let's take refuge to the calculator again, and the calculator says this is 128,750 euro. Good. So what comes next? Well, the final trade profit calculation. We have 691 plus the add backs under paragraph 8, number 1, 128,750 plus the dividend add back plus 95,000. So to what result does that lead? Well, let's again repeat the figures. 698. By the way, without that numbers at the beginning. Then we had these 128,750, and we had these 95,000. So we have a total of 8, this. Round down to even 100 euro, that is 800 euro. minus a free allowance under paragraph 11.1, and the answer is no, it's a GmbH. So result times 3.5% under 11.2 Trade Tax Act. That leads to an impressive number, I hope at least. So let's use our calculators. That times 3.5%. So there we end up with the trade tax base of this. Number 4, apportionment to the cities involved. Total of wage, that happens according to the wages relationship, or according to the wages, 29. So we have total of wages paid, that's 1 million. Share for Cologne, 25%. Share for Düsseldorf, 25%. Share for Frankfurt Main, 50%. Because that is 250,000 out of 1 million. And this is 250,000 out of 1 million. And this is 500,000 out of 1 million. We do not have a problem with the fictitious wage for the owner, because this is a GmbH. There an owner would get a real salary. So so we have the trade tax base for Cologne, 25% of the trade tax base. Trade tax base for Düsseldorf, 25% of 28,830. And we have the trade tax base for Frankfurt Main, 50% of 28,830. So again, let's take refuge to calculators, because now it might be good to find some concrete figures. So this is 7,708.67, and this should be the same amount taken twice. $14,417.38. So we would have the trade tax for Cologne for 75% on 728.67. And if my calculator is right, that's 34,241.18. The trade tax for Düsseldorf would be 440% on this figure. So that would be 31,718.15 or 14. And the trade tax for Frankfurt Main would be 460 on double the amount. So here I hope that it's 66, 319.76 or so. Rounding mistakes are always possible, but as you see, that is probably the solution of the case. I hope I have forgotten nothing, and I hope your sketch of your solution had nearly all of these things, and especially that you have not forgotten any reference to any part of the law, which is rather routine work. Okay, a last necessary aspect which one should mention in connection with the trade tax is the procedural law aspect, that is, who writes the tax notice. Here there is something special going on because the trade tax assessment is made in 2 steps. First, everything where fiscal knowledge is needed for, that is, up to the trade profit calculation, the trade tax base calculation, and its distribution to the several cities. All that is done by the fiscal administration, so by the fiscal office. There you get 2 tax notices. First, one on the amount of the trade tax base, so that figure after the application of 3.5% factor. Then the decision which part of that result goes to which city. And these are administrative acts, so decisions in an individual case, which are presumed to be correct and which will remain binding and valid if you do not object against them within the official objection period of only 1 month after notification. Later, naturally, not only you, but also the cities involved get communicated which part of the trade tax base is allotted to them. And then the city administration sits down and writes you a letter, how much do you owe us? So they simply apply their city multiplier to their part of the trade tax base. Now, also this is an administrative act. You can object against it. In this case, you have to file the objection with the city authorities, not the fiscal office, because you have to object always to the authority where the decision comes from. And you have again 1 month of time. But the problem is, well, what is decided by the city to which you still could object? They apply their city rate, let's say 440%, on their share in the trade tax base. Now, the amount of their share has already been definitively and bindingly decided in the first stage. So you are no longer allowed to attack that figure because it has been definitively decided. So the only thing you could reproach the city is, hey, during the multiplication of your city rate with the trade tax base share which you have, you made a mistake in the multiplication, or you made a copying mistake when you copied my trade tax base. You copied it wrongly from the original tax notification. Highly improbable. Or, sorry, you sent this tax notice to my father, but my father died yesterday, so you can't demand a tax payment from a person who no longer exists. It should have been directed to me as the heir. So it's highly improbable that you can find a reason why you still could object to the tax notification which comes from the city. The only chance which you have is to apply for a change in the original tax base and tax allocation assessment if you find an allowed reason why that could be changed. For example, that new surprising facts come up without your that you had committed any carelessness or so. If the underlying trade tax assessment, the first step, can be changed and has been changed, then the city has to react and take over and draw the conclusions from that change. But as long as the original decision stands, you have no chance it will remain binding. So that is important if you ever deal with such things. You have to react already to that first tax notification. Hereby we inform you that your trade tax base is blah blah, and that it's allocated in the following way to the following cities, then you have to check if you can live with that, or if you think there have been mistakes made during the application of the law or during the finding of the facts, and you have directly to object. Otherwise, things will go wrong. Okay, that shall be enough for today. We still have to talk a bit about how trade tax expense will be treated in the context of income tax, but this is a bit of a topic for yet another video. Thanks for watching, and I hope, as always, you survived this video more or less alive and healthy. Try to memorize these things as good as you can and do the one or other tax case to practice from time to time. Thanks for watching. Would be great to see you again on this channel. Don't forget to recommend that channel to people whom you know, or to people where you want to get them to avoid you. Just depends on your personal taste. Thanks for watching. Till next time, and goodbye.